Hey everybody, Economic Ninja here. I hope you're doing well. I have a story for you, and I think it's very, very important to go over this because it has to do with Wall Street insiders that are warning about a market crash, a collapse. And we're going to talk about that right now because they're talking about some pretty interesting things. So it's out of Yahoo Finance. Jeremy Grantham predicts U.S. super bubble will pop, wiping out 35 trillion in stocks and housing. Here are the best 11 the 11 best quotes from his new note. Okay, so we're going to go over that and talk about it because I think it's very, very important. You guys know that the Economic Ninja, if you haven't been following me for a long time, I have been talking about this for about a year. The channel is actually only about a year and 4 months old. So I think it's really important to go over this. So he talks about an epic market bubble that could soon implode. And here we go. It says, Jeremy Grantham said Thursday that the U.S. is experiencing a super bubble in stocks, housing, and commodities, and predicted that it would all soon come crashing down. Same thing as I am predicting. However, guys, I'm not a financial advisor. I'm not a financial professional. Just a dude with a brohawk and a dream. He says he's the founder of the GMO investment firm, and he said in a new note that $35 trillion worth of wealth could easily be wiped out in the U.S. alone and in a long, drawn-out process. Slammed the Fed and gave some interesting advice. Let's go through this. All right, he says here, the U.S. stocks, housing, and commodities super bubble. Today, in the U.S., we are in the fourth super bubble of the last 100 years. The others were in stocks in 1929. We've talked about this before. The run-up through the roaring 20s. And 2000, which I was a part of. I was investing prior to that and actually moved into bonds right before that dot-com burst. He says that in housing in 2008. He said the equity bubble has now been joined by a bubble in housing and an incipient bubble in commodities. Absolutely correct. Now, the commodities he's referring to are things like oil, lumber, things like that. We have yet to see the commodity bubble get blown up for silver and gold, but there's a whole nother story behind that. We'll get into that in other videos. So, by the way, if you haven't subscribed and you'd like to find out more about that, please consider subscribing. He says it may already be imploding, which I completely believe. I believe it started September of 2019 when their interbank lending rate completely spiked at over 12%, showing that banks were so scared of the economy and the state of affairs that they wouldn't even lend to other banks. He says the final feature of the great super bubbles has been a sustained narrowing of the market and unique underperformance of speculative stocks, many of which fall as the blue chip market rises. This occurred in 1929 and in 2000, and it's occurring now. The tech-heavy NASDAQ 100 has fallen 9% year to date, and he is absolutely correct. The stock market is really being held up by the FANG stocks, just a handful of stocks that people, I believe, truly are romanticizing, that they have fallen in love with them. They think they could do no harm. And I want to remind you, very similar to the 2008 debacle, where we had just a few companies really holding up the entire market, I believe it's going to come crashing down. So he says the most important and hardest to define quality of late stage bubbles is in the touchy-feely characteristics of crazy investor behavior. And we have definitely seen that. There's no lack of that. But in the last 2.5 years, there can surely be no doubt that we have seen crazy investor behavior in spades, especially in meme stocks and in EV related stocks in cryptocurrencies and the NFTs. Ladies and gentlemen, the Economic Ninja has been talking about this for literally a year, that we are in something akin to the tulip mania, the tulip bubble, or the emu bubble. And if you haven't read about any of those, please Google them, check them out. It's pretty amazing. Whereas when I was growing up, learning to be a young investor when I was in my early 20s, these are episodes in history where people would laugh at that. They like, who would ever buy a tulip bulb for that much? But I'm telling you right now, this is happening right now. No matter how advanced we get technologically, or we think that we're just that much better than the civilization before us, let's say, the facts are facts. Markets go up and markets go down based on one fundamental: emotion. You could say it's demand, you could say all of that stuff, but it is still based on emotion. Human emotion. It is the human emotion that drives items up and items down. End of story. You can talk about the Fed printing tons of money. The difference between inflation and deflation, again, human perception. All right? So the crash could wipe out 35 trillion of value. Said when pessimism returns to markets, and that is going to happen, I believe quite soon. I believe personally, not financial advice, is going to happen this year. We face the largest potential markdown of perceived wealth in U.S. history. And I completely agree. And right here he says the S&P could drop 45%. I actually have a higher number on that. Now again, not financial advice, just a dude with a bro hawk and a dream bringing you the news. If valuations across these asset classes return even 2/3 of the way back to normal historical norms, total wealth losses will be in the order of 35 trillion in the US alone. Now, that is a massive number, ladies and gentlemen, and I believe that we're going to see this also because of the rising interest rate environment. Set aside what you think of the Federal Reserve and how much in control they are. I can guarantee you one thing. As of right now, they are getting ready to lose control, and it's not their choice, trust me. Because again, the human perception of what is going on in the markets is there's a brewing fear. It's in a lot of traders' guts right now. They don't know how to normalize it or give it words or understand it, but it's brewing right now. And I believe that that fear is going to lead to much higher interest rates. And again, the Federal Reserve is not going to be able to hold it back. Now, let's talk about the last part, being savage on the Federal Reserve. All the economic and financial dangers that are now building up from the multiple major bubbles do not appear to be considered especially dangerous by the Fed or most of its equivalents around the world. I completely and utterly agree with that. We saw the exact same thing with Ben Bernanke trying to calm the world, or the nation, saying in 2006, don't worry, we have stemmed the tides. We've fixed the housing crisis. And by the way, housing can't fall all throughout the country at the same time. And I think he said almost impossible. And guess what? He was wrong. But today, people don't remember those quotes, and they pay him way too much money to come speak at their lectures. With the clear dangers, he says, of an equity bubble revealed in 2000 to 2002, the even greater dangers of a housing bubble in 2006 to 2010, and extra risk of doing two asset bubbles together in Japan in the late 80s and in the US in 2007, what has the Fed learned? Absolutely nothing. And he is 100% correct. And then some last advice. And then I'm going to leave you guys with the rest of this article, okay? Which there isn't that much. He says to avoid U.S. equities, and this is his advice, a professional, avoid U.S. equities and emphasize the value of stocks of emerging markets and several cheaper developed countries, most notably Japan. Speaking personally, he says, I also like some cash for flexibility. I agree. Some resources for inflation protection, as well as a little gold and silver. And that's what I've been talking about lately. I think it's very important not only to have physical gold and silver, but also understand the importance of some resources for inflation protection. That's why I've been talking about resource stocks, gold and silver mining companies, copper mining companies, things like that. And then he says, cryptocurrencies leave me increasingly feeling like the boy watching the naked emperor passing in procession. So many significant people and institutions are admiring his incredible coat, which is so technically complicated for superior that normal people simply can't comprehend it and must take it on trust. I would not. Now, with that, I want to caveat and end this right here and say I think that it's very important to understand that NFTs are something that I don't think a lot of people understand. They have their places, but not when, in my personal opinion, when we're trading pictures of crazy monkeys. Can you make money off them? Absolutely you can. Have I made money in the past off of these type of cryptocurrency things? Yes, I have. Do I believe that they're going to be around forever? No, I do not. I believe the functionality of NFTs will be there. I believe the functionality of blockchain will be there. But trust me, when I say that I think that most cryptocurrencies, a vast majority, a large percentage of the whole market will not be around 10 years from now. So be very careful with that. However, there's a lot of money to be made. I have a majority of my wealth in cryptocurrencies. And again, this is not financial advice. Guys, I hope you got something from this. If you did, please consider subscribing. I'm going to link the article below. The Economic Ninja is out.